Hello and welcome to Getting Started with Technical Analysis. My name is James Boyd. Barbara Armstrong is out and she has asked me to cover this class. She thought I understood something about technical analysis. So, with that in mind, she gave us a topic here today on whole moving averages, and we're going to talk about the differences in those moving averages compared to exponential and simple and show a few trade examples. We have also Scott Thompson with us in the chat. You'll see his initials as ST. Say hello, Scott. And also, this class is live, but it is also being recorded. So if you're watching on maybe the archive, I'll show you some resources that you should be made aware of. And also join us each week at this time, this station, on a weekly basis, live or recorded. Now, we got with us Jay Richardson, Janberg, Kevin, SPG 4745, Caitlin, Trader Joe, and many others. Welcome to all. Just real quick as we get started, remember I do post educational content on X. My handle is at James Boyd CS. Take a look at that. We have some announcements there as well. Also some examples of the market, different types of market commentary. You'll actually see that right there and examples. Now, just real quick as we get started, when I talk about the material, it's really intended for general informational purposes only. Now, I don't really plan to talk about options per se. You might have a question on that. But just remember that options carry a high level of risk, not suitable for all investors. Also understand that not all option strategies are the same. Okay. Also, when we talk about the examples, we will do those on the paper money software application. Investing involves risk. Life kind of involves risk, right? We wake up every day to risk. And it's always there. It's always there. And also remember that short options can be assigned at any time prior to expiration if you practice those type of strategies. And be aware of that. Now, just real quick, Barbara, when she's normally teaching this session, she has 9 lessons that she focuses on. She left a topic of moving averages here today and focusing on whole moving averages. I want to show you the difference between the simple, exponential, and whole moving averages. So I'm going to show that actually initially. As we do that, we'll talk about the markets, and we're going to talk about a few examples in using those moving averages. Now, if you said, I don't even know what technical analysis is. Well, technical analysis is the study of price and volume, and you also using indicators to try to help you track and trade and or invest in those trends. So when many people get started in the stock market, this is usually how many people start. Now, first off, if you're just joining us, be made aware of, if you go to youtube.com, our channel is called Trader Talk Schwab Coaching Webcast. So if you just pulled up on your site, youtube.com, you can just go in the search box and just type in Trader Talk Schwab Coaching Webcast, and it's going to get you to this page. If you have not subscribed, feel free to do that, okay? It's free. Now, I have not a lot, but I have a couple friends, very well educated, let's just say different professions, right? Some of them, they've talked to me about the markets for years, and they've said, I don't know what I'm doing. And I said, well, how do you think you could learn? Well, that's why we have different classes like this. So if we went to this page, you're going to see that schwab.com/coaching, you're going to see that on this page, which I sent to you in the chat, live webcasts and virtual workshops. Now, so just like if you said, I want to become a doctor, an accountant, a lawyer, whatever, okay? You went to class, same thing here. Now, if you went to this, you're going to see that this page, I'll put this in the chat as well, bookmark this, because you can actually pick the curriculum that you want to learn. So for example, this is going to show us the calendar for August, okay? And these are the past classes that we actually did. Here we are today on the section of getting started with technical analysis, the whole moving averages. 2 more events, what are they? And you're going to see that there's swing trading, okay, today, and there's also building a stock portfolio. So you're going to actually see that. You can also see tomorrow, the next day after that, and etc. You can also recognize that over to the right-hand side, you can pick the coach, you can pick the product, you can pick the skill level. If you said, James, I'm a beginner, I know I don't know anything. We were all there once. you're going to see that right there, beginner. Okay. If you said I'm intermediate, it's going to comb out the classes based on that skill level. So make sure you know about that. Now, there is also an online course that I'll show you in just a moment where you could actually say, look, can I see a textbook? Can I even go more basic than coming to, let's say, a class where I can see the textbook demonstrated. Now, let's actually go right now to the platform. And what I want to do is I want to just show you a basic chart, okay? Now, the chart that I'm looking at is Intel, okay? Now, some of you asked about this earlier. Taught a class about 2 hours ago, and so I did not get to Intel. This is my way to say sorry, okay? And now, if I take a look at Intel, we have 3 different moving averages on the chart. And let me just explain what these are and guide you in your learning. Number 1, the red line on the chart is a 10-day simple moving average. Okay? Just simple. It's not weighted, anything. Just taking the last 10 days gives us a general direction of trend and or momentum. If I said 10 days, we're really saying momentum. Okay? Now, the blue line, that is your exponential moving average. Notice the exponential moving average is higher than the simple moving average. Why? Because it weights the more recent days heavier. Okay? It's more sensitive to the recent price action. And the green and red line, the one I'm pointing to here, that is your whole moving average. Now, one thing you'll notice is the whole moving average is a lot higher than the simple moving average. So why would someone use a simple moving average? Well, they're just trying to see a general direction, okay? That 10-day period moving average for us is just a basic sentiment gauge for momentum. If we use something like, let's say, a 10-day simple moving average, yes, it gives a basic gauge of the sentiment of momentum, but it's maybe a little too slow. That's where someone in the middle might say, look, I'm going to use an exponential moving average. One of the purposes of moving average is not just to tell us the sentiment, but it's also maybe a way where the investor might say, James, I'm going to use the moving averages as a way to place a stop, setting a stop underneath. The other purpose of actually using like an exponential moving average is actually where the investor might say, well, James, sometimes the price does not come down to the simple moving average. So that's kind of 2 reasons, okay? The exponential, sometimes you'll see the price drop, and the price drops down to the exponential moving average, where some of those bounces could occur, okay? If we use, let's say, a whole moving average, one of the reasons why we like the whole moving average, it's like the exponential, it's even more weighted, okay? But it also has some difference here in the fact that it has the color variation. Red is actually saying sellers are in control, sellers are in control, sellers are in control. And all of a sudden, green is actually showing that it's actually changing sentiment from bearish, red, okay, to green, showing more of a bullish sentiment. That is not a moving average crossover. That's just looking at the 10-day 10-day whole moving average by itself. Now, when you came to this test tube, or go to that test tube right there, you're going to see where we can go to edit studies. If I click on edit studies, and I said, James, I just want to kind of know a little bit more about this, okay? That's just, I like that. Well, if I click on, let's say, the whole moving average, you're going to see that if I click on that, I can also get some ideas, click on that, and I can see more really what this is showing. So be made aware if I type in any of these, like a simple moving average, okay? Simple moving average there. You're going to see on the right-hand side on some of these, you're going to see there's question marks. Those question marks, if you want to learn more about that, it's going to kind of give you a definition of what it's trying to do. And also, if sometimes on some of these, it will even give you more details. Just be made aware of that. The whole purpose, whether we use the simple, exponential, or whole, is we're trying to get buy and sell decisions. Okay? That's the brass tacks. That's where the rubber meets the road. Now, let me ask you a question. If I were to ask you, which type of moving average do you like to look at? What would you say? Now, as I'm getting an answer back, I would tell you I like to use a 30-day simple moving average, maybe a 21, 30, or 50 or 200 period moving average, just to see basic trend. Okay. But on a day-to-day basis, if someone said, man, how often do we really getting a signal based on off a simple moving average? The answer is probably not as often as you think. Okay. Gives a general direction, as we already talked about, but it's just not as sensitive. If we want to try to get more buy and sell potential setups, that's where the exponential comes in. That's where the whole moving average comes in as well. Okay. Now, what I'm going to do, now, by the way, let me just pull this up. When we type in moving average, so if I type in moving average, if you said, James, where could I see the whole? You're going to see these moving average, you can see right there. But a couple of these, just want to see where I can actually show that whole. Yeah, there. So if you want the whole moving average with some clarification, just type in whole, okay, space MOV, and there you're going to see the definition of that. Okay. So now let's go and show some examples. Let's start by looking at Intel. Now, if I looked at, let's say, Intel, you're now going to see, now let's kind of go back to a standard chart that we normally look at. So first off, any questions here? Okay. Any questions? The question from MS Schmidler is one. It says, how does the whole moving average compare to Kaufman's adaptive moving average? The answer on that is, at least initially, is I'm not sure. I have not personally looked at Kaufman's adaptive moving average. Okay. You'll see there's a couple different tools, and that doesn't necessarily mean you look at all of them. I could look at it and comment on that next week. I just haven't looked at it and seen the comparison. Now, with what we just did, you could go to that and see how close is it to what we just showed. Which moving average is it most parallel to? Now, if we take a look at this, what I'm going to do is let's kind of minimize that, and let's go to more to a standard chart. And I'm going to bring up just real quick the whole moving average. Now, the whole moving average that we look at, we're not just looking at a 10. Now, the 10 period moving average on the right hand, which moving average is which? Well, we know which one is which because whatever has a shorter duration of time, that's the 10 period moving average that's tracking the price more closely. The lagging moving average is the 20. So two different moving averages, the 10 for actually momentum, the 20 for actually basic trend. You don't have to do that. You might do a 10-30 combination. Okay, we're using a 10-20. What I like, and I'm entitled to what I like, okay, I'm a grown man here, 49 years old. I can pick what I like. You can pick what you like. Don't let other people tell you what to do. The biggest actually thing is I also like the shading of this. This is the moving average shading. And I'll share with you this chart. That way you, if you deem for yourself, you like it, well then you can just have, well, let me actually send that right there. This is going to be the shading, okay? Now, let's take a look at this and let's kind of talk about this. So when we take a peek at this on Intel, one of the themes that we've been talking about so far this week, starting yesterday, was really kind of looking for some stocks that really had a level of resistance, or I should say had a support level, broke it, and might be trying to get above that area of resistance. The theme of some of these examples we're going to talk about today are stocks that recently broke support and then are pushing back up inside an old channel. Okay, are you with me on that? Now, if you say, no, I'm not really with you on that. Remember the example that we've kind of talked about in the last day or so on like something like Intel. Now, remember, just yesterday, we said, oh man, wonder if we break above the 28,847. And here we are halfway through. The reason why these bullish reversal patterns can be so strong are A, bullish investors are actually getting in. Two, bullish investors who already have the position are adding more. And three is those who were bearish the position are covering their shorts by buying those shares. And Those who are short are now reversing their positions by covering short and going long. I see when I say I caught the first two, but points 3 and 4 I don't relate to. Okay. Just know that not everyone in the market is bullish, and sometimes people reverse their positions or their strategy. Now, in this example, the reason why I brought up the NASDAQ is, and I'll bring up SOX too. The SOX has been something we've really been watching. Why am I bringing up the SOX? Well, because Intel is underneath the umbrella of the NASDAQ and the semiconductors. Now, if you look at Intel, we're speculating. Now, whenever you do a trade or an investment, you don't know what's going to happen in the future. That's why you position size. If we knew the future, we would put the whole portfolio in the paper money account in one position. But we don't know the future. So we position size, asking ourselves, hey, if we're wrong, how much am I willing to invest and how much am I willing to be okay with losing if I were to lose that in the paper money account? Now, what I'm going to do in this case is I'm going to right click on where we are now, and I'm going to actually, no, let's go to the paper money account so we could actually put this trade in, and that way we could follow through on it. Now, let me delete these lines, and I'm just going to put this in the paper money account. I'll redraw the lines we had before, something like that, right? Here's where we were. I'm going to right click on where we are now, and I'm going to go buy custom with OCO bracket. Now, what I'm going to do, and some people like to do this, okay? I'm going to make the sell orders GTC, good till cancel, okay? What we're going to do here is we're going to say, look, I cannot put in more than 10% of this account value. So it's going to be right around $5,800, no more, okay? Now remember, one of the purposes of the moving averages is we're trying to look for moving averages where they are green, okay? Now, if all of a sudden that the price starts to poke its way inside this old channel, those four things we talked about, new bullish investors start to buy. Current investors start to potentially buy more. Point 3 and 4, short sellers reverse their position or close their position, and that could cause those investors to be buying the shares too. Now, if we look at this, I'm going to say $5,800, which is about 57 shares of stock. Now, notice that right here, wherever we right-clicked on the chart, that's what the price is that's showing down there. I'm going to just leave this. It's defaulted $1 higher than where it's trying to buy, and $1 lower. Now, some people like to do this, okay? Now, remember how the stop works. It's saying if we go to that price or less, sell the shares of stock. Now, what is the investor trying to do? They're trying to take some of the capital they have, and they're trying to get a return on that capital to grow their money. Now, I just got to point this out, okay? I have a friend of mine. He's been sitting in cash for about the last 8 years. Every time I see him, he just says, I'm just not comfortable to invest yet. He hasn't taken any classes on investing, but sitting in cash, man, I mean, you could, but the investor is actually investing in maybe stocks to try to get a higher rate of return, maybe than inflation. That's the main reason why someone does stocks. Now, remember, if the way the stop works, if it goes down to that price or less, it triggers the position to sell, but it could be sold at a lower price. Send that order. Now, notice what happens on the price graph now. When we do this, what you're now going to see is we're going to move the target up to the top of the channel. Okay? Do not click on the X because it will cancel the order. And the stop, what we're now going to do is we're going to move the stop, left click on that bubble. Do not click on the X, it will cancel the orders. And I'm going to set the stop right below today's low. Now, when I say right down below today's low, I'm going to put it right at 92.69. Gary, you would think so, okay? Now, here's the deal. If we set that stop at 92.69, we're saying sell at that price or less. Gary's making a very important point. Okay, so my kids are 30, 28, 21, and 19. A lot of times when people are getting started, they always think that they got to take large amounts of capital. The investor might say, look, I'm just going to buy one share, two shares. When we learned how to swim, we probably were not dropped in the deep end of the swimming pool. We were in the kiddie pool, okay? A foot deep, foot and a half deep, right? With a life jacket and a lifeguard, okay? Same thing goes here. And what we're doing is paper money account, okay? So just being willing to practice a lot of times can take some of that emotion down. So now what we actually have is enter those shares, and we're trying to get this pushed back to the upside. So on the example of, let's say, semiconductors, the reason why we're talking about this is one of the themes that I made mention of on the X page, and let me actually pull this back up if you said, James, I did not see that. I posted on Friday. Okay, there it is. Let me send this out to you. If you said, James, I did not see this, this is really, I made mention. I said, there's a lot of gap down bullish reversals right now. This is what I posted on Friday. I said, be on the lookout. We're starting to see a lot of them right now. This was on Friday afternoon. Here we are on Tuesday. And now what we're going to look and see is, can we start to look for some of these stocks that went below support and are now getting back above resistance. Now, what I want to do is I want to kind of show a couple other stocks that might be in the same area with the idea of using the moving averages. Now, let me just do something real quick, okay? Let's imagine that we had a watch list. Let me bring this back up. Let's imagine that this was a sample watch list, okay? I do not want anyone to think that we have to look at each stock individually to see what are the color of the moving averages. The purpose of what I said this morning and right now is if we had a watch list, whether it's personal or public, we can put on two columns that would actually tell us, scripts are not guaranteed for accuracy of timing, verify, it would tell us actually what color the moving averages are, hence the green shading, and a green backdrop, and the 1.0 is the number of days the moving average on the 10-period moving average that it has been green. Now, what I want to do is I want to add one more stock to this list. GLW. Now, just for a second, okay? Now, 2 days ago, I dropped my phone, cracked the screen. One of the main companies that actually makes that screen is Corning. I'm going to go to that in just a second. Now, what you're now going to notice is GLW, if I follow all the way over to the right, we see that GLW has been up. The 10-period moving average is green, verify, and it's been green for 2 days. The 20-period moving average has been green for 1 day, verify, and that moving average crossover, X for crossover, happened 1 day ago. Now, could we also go look at Dell? We already did. Could we also go look at Intel? We just did. Could we also go look at Morgan Stanley? We could. Could we also go look at Wells Fargo? We already did. Okay. Now, what I'm going to do is I'm going to come. Now, by the way, what does the red mean? Well, red moving averages. I do want to come back to that because sometimes when these prices drop down, doesn't mean they drop down forever. Okay. Just like we've seen with the semiconductors lately. I think the one that maybe also deserves a little credit is probably going to be IBM. There were some questions on that. We'll also look at that as well. Okay. But let's first look at GLW real quick. Now, when you look at GLW, notice, now let me ask you a question, okay? If I were to ask you a question, what was the old horizontal support level? What would you say that it was? What was the old horizontal support level? Now, you might be asking a question like, why does this matter? Well, but what happens is people use moving averages to make buy or sell decisions off. the support or resistance is also telling us who's in control. Prices above support, bulls are in control. Prices below the support, bears could be in control, sellers. Now, if I said, well, where do we see that old support? The old support was really in this vicinity of, many of you are saying, James, I see 170. Now, that was the old floor. Now, if we now tippy toe over here to the right-hand side, this old floor might now become the new potential resistance. Now, what do we see on the right-hand side? Well, same thing we saw on Intel. We actually saw the price where the 20-period moving average, which is the proxy for trend, that red line was saying, do not buy, do not buy, do not buy, do not buy. That's what the moving averages are telling us. The red moving average is saying, hey, the trend is bearish, 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 trends more bearish, trends more bearish, trends more bearish, no, 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 all the way down. Now, that doesn't mean that people listen, okay? People, children, kids, teenagers, young adults, they tend to kind of do what they want to do, even though the signal is not telling them to get in. Does that make sense? We on the same page? Now, it wasn't really until right here, just yesterday, that 20-period moving average went green. Now, I said this yesterday, okay? As people, we have memories. Problem with memories is we tend to say, well, we had more selling pressure than buying pressure, so therefore this one day, I don't believe it. Now, in technical analysis, it's not about what you believe. That's not what it's asking. It's we're reading the signs/indicators that are gauging the trend and momentum. So it's not asking you, what do you believe? It's not asking you, do you believe it? Okay? It's just saying, here's what it's showing, and is the investor willing to trade in or invest in it? It doesn't matter. We could have the greatest setup today. We do not know what's going to happen tomorrow. That never ends. Warren Buffett doesn't know what's going to happen tomorrow. Okay? Now, the thing that we kind of do know is that if the investor actually has a long enough time horizon, the probabilities of that trade or investment, maybe over time, could increase with longer potential time, especially if we're talking about indexes or sectors. Now, stocks, more variable. We don't know. The companies could go out of business, right? Now, what I'm going to do in this case is I'm going to back this chart off for just a second. One of the things that actually Gary said in the chat was the investor does not have to buy the whole position at once. So think of this like dating, right? Take her or him out on the date. You're kind of testing out the person to see if it's a match, to see if it's a relationship that you would like to pursue in your life. Well, the same thing actually goes towards investments. Now what I'm going to do in this case is I'm not going to buy a full position. We're only going to buy a half of a position. So if we normally put in $5,800, example given, I'm only going to put in $2,900. Well, what would the investor want to see to add more to the position? Now, answer that question for me. What would you want to see to say, I'm going to add more to the position? Well, we might say, well, duh, James, go up. But go up past where? Well, they might say, James, if we can get above that yellow line, I'd add more to the position because the stock is going in the intended direction. Okay, so the moving averages would be going up, but also the price would be getting above old support, new potential resistance. Now, seeing it is different than trading it. Okay? Now, I remember a good friend of mine. I mean, this guy, he was very knowledgeable. And I just asked him, so what trades you in? Oh, I'm not in any trades. And he was very good at analyzing the market, but he didn't trade. Okay. So the rubber meets the road where you actually put some capital to work. And you check and see if it's actually good, the trade's going to materialize. Now, what I'm going to do is I'm going to right click on this chart, put in the paper money account, GLW, and I'm going to type that in right here. Now, how do you really learn? You paper trade, okay? Now, when I got started, okay, we did not have paper trading. At least I didn't know there's any paper trading. It was real money, okay? Now, it wasn't before the Vietnam War, but it was maybe just a few years after. Joking, okay? But it was close. Now, here's the deal. We're going to actually say, look, we're going to buy not a full position. We're going to do 2,900. We're going to say, look, I'll add more capital if you show me more trend. Repeat that. I'll show you more capital, more investing dollars, if you show me more trend, meaning an upward trend. Now, what I'm going to do is I'm going to go put the target there. Where would you put the target? You already perfectly nailed the 170. What's the level of resistance above the 170? Well, if we said where do we see above that, we're probably saying right around the area of, let's say, 209. Okay? Well, that 209, if we take a look at that, we're going to put that in the kind of the target area if the stock went up to there. Now, we don't have to put perfectly 209. We might say 208 or 207, just in the area, okay? Now, when we say that, we're not going to say that's only good for the day. We're going to say GTC, good till canceled. Now, this trade idea, now, if you wanted, just if we were having a personal conversation, let's say we're at Starbucks, where did this trading idea come from? I'll tell you where it came from. Now, historically, I was only a stock trader. I would go long, bullish, and I would go short, bearish. I didn't know anything about options. Nothing. Now, some of the worst losses that I ever saw historically was when the stock broke support and then the stock rallied back to the upside and then the stock broke what should have been resistance and the stock did what we kind of call a V pattern. The V pattern is where the stock goes down very aggressively and the investor says, aha, I'm right. Now, how many of you like to be right? Okay? How many of you like to be right? Now, when you're right, are you easily swayed that you're not right? Okay? Now, these are pertinent questions here. Now, all of a sudden, if it starts to go back to the upside, you kind of sink your heels in and say, no, 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 I'm right. I think the price is going to go down, even though the moving averages are showing me a different direction. And now if that price gets above resistance, nah, I don't believe that. This is going to go down. So now instead of trading technicals, reading the chart, now you're trading your feelings. Now you're trading the profit loss on your monitor tab, right? And now you're trying to play that game of called break even Steven. If I could get to break even, man, I would be willing to eat crow and now willing to admit that I'm wrong. Now, if you said, James, I don't relate to anything you just said, you're the luckiest person in the world. Most of us have actually gone through that. Now here it is. The goal is to get through that as soon as possible. Okay. Now, investing is a little like a relationship in a way. If you did something wrong, you want to admit it as soon as possible and make course correction. Now, in the world of investing, it could be financially damaging if you don't admit it sooner than later, especially if you get the trend wrong. Now, what we're going to do in this case is we're going to go stop day GTC. And the stop that I'm going to do is going to be right at where that green line is. I'm just going to put a number right around 147. Okay. Now, here's the deal. If someone said, well, James, how are we using the whole moving averages on this chart? Well, what's the color of the whole moving average? Green. What what do we want the whole moving average color to be? Green. We would like the price to be above the moving average. Okay, so two things. You like the whole moving average to be green. I'm pointing right at it. If the price is going up, the candle is probably above the shorter term moving average. Fair? Okay. Now, can you use a moving average in conjunction with support and resistance? Sure. Okay. And that's what we've talked about. Okay. Now, what I'm going to do is we're going to actually put a target right at 208 and then a stop at 147. Now, what I'm going to do is go confirm and send. Remember how the stop works. If we go to that price or less, sell the shares of stock. Now, what I'm going to do is in these examples that I've shown so far, they were something where the price dropped down and they've started to go back up to the upside. But James, can you show me something where it's maybe already an upward trend? Sure. Okay. Now, so GLW, example number 2. Example number 1 that we did was Intel. Let me show you an example of a stock that is maybe did not go down as far, that is maybe starting to turn up as well. Now, I'm going to use the example of Citi. Okay? So let me just be crystal clear here. So if someone said, James, I'm brand new to the world of technical analysis, I just want to get buy and sell decisions. Well, example given number 1 is you're just trying to get this. This is the 10-period moving average. I'm going to put a little arrow, up arrow, for that's where the investor got in. And an out arrow when the 10-period moving average went down. This right here, the arrows represent the entry and the exit of the position. You clear? Now, if we have an exit right there, the re-entry to get in would not be until here. Okay? Now, what happens is the exit was right there. So how are we drawing those lines? How are we drawing the arrows? The arrows are based off the color of the moving averages changing. Are you with me? And that shouldn't be too hard to understand, right? Some people are literally trading the moving average itself, the color change, okay? Now, some of those entries and exits, they're not the same duration. That's true, as you can see here. If this was trade number 1, that lasted longer. If we looked at it right here, this one right there, that didn't last as long, okay? Just in these 2 examples. Now, if we take another example on the right-hand side, we say, well, has there been another example? Yes, there was. Just 2 days ago, if we're trading the moving average, we got, I'm going to put it right there. Here's another one. Let me actually just label it as the little up arrow, right? The up arrow. Now, the moving averages could be used in conjunction with support and resistance. Moving averages by themselves might not be the best tool to use if the stock is trending sideways. So how do you know if it's trending sideways? Well, that's where you look at support and resistance. If we said on this price graph, is there any area of resistance in the last maybe 1, 2, or 3 weeks? What would you say? I think you'd say, sure. James, I see resistance. Over the last couple of days, 1, 2, 3 weeks, 134 has really been an area of resistance, a ceiling. That 128, that's where kind of the price fell down and buyer stepped in and created a floor, a support. Now, 100% clear. What are we looking for? We're looking for the price P greater than the 10-period moving average. Okay, step 1, check, we got that. Step 2, we would like to see the 10-period moving average green. okay, that is actually telling us that the moving average color is green, okay? If we got that 10-period moving average green, there's telling us something about the momentum of the current stock price. How many of you feel pretty comfortable that you could probably focus on those two things? Price above the 10-period moving average and the moving average color green. And James, isn't a good chance that these two could be the same? They could be, or most often are. Okay? Now, what I'm going to do here is in this third example, we're going to look and see, could Citi try to move back to the upside? Now, let's just kind of be crystal clear. If someone said, James, I know absolutely nothing about targets at all. Well, targets on the price graph might be these prior highs, noted. But let's say I don't know anything. I'm just going to stay in until I see that 10-period moving average go red. Now, by the way, will that moving average color change intraday? It could. But most of the time, it's going to trade near the end of the trading day. But let's just say it just trades at the end of the day. Okay? Now, what I'm going to do is we're going to take an entry. What was the purposes of the moving averages? To help us gauge the sentiment of momentum and or trend and help aid in a buy or a sell decision in the paper money account. Now, on the right, what I'm going to do is on the right-hand side, now notice here, on the right-hand side, we cannot see the future. Okay? Just like when we got married, we started a business, we bought a house, etc. We didn't know the future. And I think that's something very difficult for people just to like stop thinking that they have control of tomorrow. You don't. You try to just put the odds in your favor today to see if that trend could continue. You went and applied to a job at a good company because you speculated that that job, that company might continue to be good. But that doesn't mean that everything worked out perfectly. The same thing with stock investing. If you cannot get over that, you will not ride any bullish upward trends. You're going to be sitting in cash, and you can see the market hit 100,000 on the Dow and never be in a single time because you can't get over that you don't know what comes tomorrow. We don't know what comes tomorrow. Nobody does. Okay? And so what you're doing is you're investing a certain amount of capital and you're setting a stop and seeing if the trend can play out. You know what this really kind of comes back to is thinking that you can control everything. You don't control anything. The only thing if you said you control is the amount where you invest, your position size, and where your stop is. Okay? That's what you control. Now, what I'm going to do just for time's sake is I'm going to put that stop right around 131. So all this is doing here is we're saying, look, enter at this price or lower and sell at that price or lower. Now, could the investor just invest and not even have a stop? That's another way to do it. But if someone says, I don't like that, I at least want to have some way to exit or a predetermined exit. That's what the stop is. Okay. Now, as a takeaway assignment, what I want you to focus on is trading stocks that have a green, where the price is above the 10-period moving average, number one, and the 10-period moving average is green. And I want you to be disciplined to trade that setup and exit. So in other words, on the chart, I don't care if you've seen this before because it doesn't mean you've done it. So I want you to try to look for periods where that moving average goes green and that moving average goes red. And that would be one trip, an entry and an exit. And I want you to take certain stocks that you like and trade that as many times as possible in the paper money account. Now, you might find some things out over time in doing that, okay? And that's what I want you to practice. So we said in closing, the whole moving average is used, but the color shading, absolutely, as you can see here. But also the second purpose is that it's more responsive to the stock price movement. Now, also remember that coming up next, we have the session on building, yeah, yeah, swing trading right there. Sorry about that. Ways to enter and exit a swing trade. And also, a quick reminder that if you have not subscribed to the YouTube channel Trader Talks, join us. It's free. Okay. Now, also remember that those links I sent you before regarding the webcast schedule. Make sure that you use that. That way, you can also see our content as well on past classes. Now, remember that all investing involves risk. This is not a one-off class. We'll come back next week and we'll go through a different lesson as well. So join us each week. Now remember that all investing involves risk, and this has been the class on getting started with technical analysis with a focus in understanding different moving averages like the whole moving average. We practice 3 trades. Stay tuned for our next webcast coming up next, and thanks to all of you and Scott as well. There has been a survey in the chat, and thank you in advance for filling that out. With that said, have a great day. Take care. Bye-bye.